Hey everyone, there's three things I want to cover in this week's last weekly update of 2021. So it's pretty timely. The one thing I want to make sure I cover is you are going to get hit with a lot of scary headlines about the market crashing in 2022. You got them at the beginning of 2021. In fact, if you subscribe to any Pick of the Month newsletters, you get those every December and January, and they're hitting your inbox right now. So I want to talk about how to handle those. The other thing I want to talk about is the fact that, and you're going to learn more, the fact that the market went up this year on the back of only 7 stocks. 7 stocks represented 93% of all the performance that happened this year. And then finally, I want to cover something I did last week, but I want to give it to you in a really clean, outlined way of where to have your money when the Fed stops printing money. Stick around and we're going to get to all three. Hey everyone, this is RC Peck with Fearless Wealth, and this is my weekly update. So what I do is I look at this week and I think about what is standing out the most in the markets with finance and kind of put a flashlight or a spotlight on. I have 3 things that I want to talk about this week. Now, it doesn't even matter if you don't watch Pick of the Month newsletters or you have any of them, because we get scary information sent to our brains every day. And sometimes you're doing it to yourself. I also want to demystify this idea that the stock market only went up this year because there were 7 stocks that went up. Now, I completely made those numbers up in the intro. I said the stock, 93% of all performance of the stock market this year is because of 7 stocks. I totally made that up. I have no idea what percentage these 7 stocks performed. The point doesn't matter. I want to destroy that myth with you by showing you one chart. And then lastly, we got to go over the balance sheet and where to have your money. So stick here. Let's get to this. And I want to start with the second one first. This is a screenshot of an equally weighted S&P 500 fund. So there's 504 stocks in the S&P because of splits and whatnot, or different share classes, not splits. This one has an equal dollar amount of each one of those companies. Right, so this is equal weighted, not market cap weighted. And as your brain can see, it went up and to the right this year. It actually did really well. So this idea that the market only went up because of 7 companies you've heard of like Tesla and Nvidia, that's the one most people haven't heard of. Facebook, that's one. Google, Amazon, Apple, Microsoft. Yeah, that's why. It was only because of those. Well, this price chart, if you look at the screen here, let me get this cursor out of the way here. You can see, well, that can't possibly be true because those 7 stocks are equally weighted along with basically the other 497. Let's forget about class shares for right now. So every single stock in the S&P was weighted equally in this price chart. And as your brain can see, it still went up. This is what's amazing about seeing information and understanding direction. Okay, the second thing I want to go over is you're going to start getting hit with a lot of scary stuff. Always happens at the end and the beginning of the year. I actually got this from a subscriber today. I've known this person, I think they've been a subscriber for over a decade. And be ready for a 30 to 70% stock market crash in 2022. I've got to talk about this because these bullshitty titles come out all year long, but they really come out at the end and the beginning of the year. And wow, it's already starting. Now, most people don't read the subtitle, which says no need to panic, but here's how and why it might happen. What a waste of your life to read this. Apparently it takes about 6 minutes to read. I think it's a complete waste. What's more important than this news is really understanding the direction of the stock market. There's always going to be a reason. By the way, 30 to 70%, what do they call them? Market crashes are exceptionally rare. Now, I want to bring up a price chart. So look here on the screen. Actually, let me bring up a different one. Let's just bring up SPX. Let's clean up this price chart a little bit so we can here's the S&P. And I've done a video on this before talking about how after there's been major market crashes, we don't get an additional major market crash. It's literally years and years and years and years and years after before we get another one. The closest market crash we got was actually after the dot-com crash. And after it bottomed, the market went up for another 1, 2, 3, 4, 4.5 years. And then we had another crash. That's one of the quickest crashes after a crash. And that was 4.5 years. But if you just kind of visually look at the price chart here, you can see that once there's some sort of correction, here's the big 1987 one, we don't really get corrections for a long time. And corrections, crashes, whatever you want to call them, they really clean the market out. So this, I think it's a guy who is Thomas H., assuming that is who he really is basically someone who doesn't understand how important direction is and how important it is to see what's going on. Because the market sees way more than you can, and it's digesting all the information, and it is going up and to the right. So just be prepared that you're going to get a lot of these 30 to 70% stock market crash headlines. Okay, now the final thing I want to cover this year is the balance sheet. Now, I've already gone over this already. I'm looking on my other screen here. I did a video last week, about 25 minutes, which is longer for me. It says where to hide from money printing. So I do a full deep dive. But what I want to show you on the screen here is just a very high level. I think you guys can see this okay. Let me make this a little bit bigger here. And let me just maybe there. So there's basically 4 periods, okay, over the last, let's call it 20 years, where the Fed either was flat, that's the first period, they printed money, flat, or they printed money. Now, during the flat periods, they may have slightly increased or they may have slightly decreased, but it was basically flat. Now, we are most likely going into one of those flat periods. So one of my subscribers said, can you just, it was too much information, just give me something. So here's the answer here. We can look at what did well during flat. So the last time the Fed kept their balance sheet flat was between 2014 and 2019. Now it's still decreased a little bit, but not that much over 5 years. And during that flat period, it was the NASDAQ 100 that went up 88%. Now, what I want you to notice is the S&P still went up, international still went up, gold still went up, the CRB index, which is commodities, went down. And over here, this is Bitcoin. The reason I didn't really talk a lot about Bitcoin is because it really is a super brand new investment. And it wasn't until 2017 that it really started capturing people's attention. And then it had a very, very sizable, let me just show you the correction it had in 2017. Its correction after 2017 was 83%. So there was no free ride after that 2017. And you can see here, it really was the end of 2015 to the very end of 2017 that Bitcoin went crazy, truly crazy. And so I just heavily discount that. I'm not attached to whether Bitcoin does well or doesn't do well, but it was so new and such a small part of the overall investment complex. That's why I have it in yellow here. I wanted to highlight it, but not compare it to, say, the NASDAQ or the S&P. So the last time the Fed was flat with their balance sheet, it was flat to slightly down, the NASDAQ 100 did best. Okay. Prior the last time the Fed was flat and it increased by 23%, I misspoke a few minutes ago. From 2014 to 2019, the balance sheet slightly decreased 16% over 5 years. And then from 02 to 08, it slightly increased. During that period, gold was actually the winner out of basically the stock market or gold. Now, here's what I think you may want to take away from this. And we'll talk about real estate in a second because it's at the very end and I have 2 ways of showing it to you. What I want you to notice is, first of all, even when gold won, the NASDAQ was still up 82%. When it increased, the NASDAQ was up 184%. When it went flat, slightly down, the NASDAQ was up 88%. When it increased 230% over 2.25 years, the NASDAQ went up 115%. So even when it wasn't the winner, the NASDAQ was still crushing it. And that doesn't have to be the case for the rest of the 2020s. But something will have to supplant, replace that, really the NASDAQ eating the world, technology companies eating the world, and not just technology companies in the US. And I was on Bloomberg this week and they asked me about technology. I said, it's a weird word to use, right? Because the two biggest companies in the communication sector is Google and Facebook. Are they communication companies or technology companies? They're technology companies. The largest company in consumer discretionary is Amazon. That is a technology company. The largest leisure company, I believe it's largest. Let's just quickly Airbnb. Am I right here? It's $100 billion. I think it is definitely bigger than Hilton. I don't actually know Hilton's. I don't really know Hilton. Is Hilton on here? Maybe it's an H. Maybe let's see if it's an H. If not, but the point I want to make is, yeah, here it is right here. Airbnb, which is, I believe, I'm kind of going out on a tinge of a limb, is the largest leisure company in the world at $100 billion. First of all, it doesn't even own hotel rooms. Hyatt is $10 billion. So Airbnb is 10 times bigger than Hyatt. What is Airbnb? Is it really a leisure company? It's a technology company. So this category, a category called technology, is companies who have figured out how to leverage zeros and ones in programming language and are crushing it. And a lot of those live in the NASDAQ 100. This can change. International could take over US domestic at any time. And when it does, we'll shift and I'll start showing that, in fact, international is taking over. But when we look, here's the NASDAQ 100 priced in international stock market units. Just go ahead right now and just know that this price chart is not in US dollars. It's in what I'm making up, something called international stock market units. It's a real currency in the sense that there's actually value there. But I just want you to see that the NASDAQ still went up during that entire period. Now, part of the reason we don't have more data, and let me just go back, MS World, is because VEU hasn't been around as long. Now, you can see from basically 90, no, that's actually 2000, to 2006, international outperformed. So if this price chart is falling, that is telling you that international outperformed the NASDAQ. Now, it doesn't mean the NASDAQ fell through those 6 years. It just means international outperformed. So it could very well be that international is going to take the baton and start leading the world markets higher. It absolutely can happen. But here's the thing. We want to wait until it starts to happen. We don't want to predict. We want to follow direction. It's one of my 3 core tenets. You follow direction. You understand direction. You have to see what's going on, and you have to have clear signals to know you're right or wrong. Those are the 3 things. Know direction, see what you own, right? And have clear signals. Okay, so back to the balance sheet of the Fed. The Fed basically said we're going to stop printing money in 2022. All things being equal, how assets and investments have responded to the Fed over the last 2 decades, it's looking like the NASDAQ could have a very good 2022. Now, let me finish by talking about real estate. And can you guys see this down here? Let me just highlight this down here. If you look at the screen, let me just make this bold. Let me make this price a little bit. Yeah. Oh, no, that's a little bit too big. Let me just show you this. These numbers down here represent the total, the return from when the Fed has their balance sheet. You can actually look up, the data only goes back 2 decades, but you can get price charts to see the Fed balance sheet. So that's why I only go back to 2002, because that's all the data I could find. During that time period, and I'm not going to add up Bitcoin because it wasn't even around in 2002, but you can see the NASDAQ did best over that 20-ish years. The S&P still went up. International did not do well. Gold didn't do bad. It was, you could call it 3rd place. I'm kind of squinting because we have real estate over here. And what I want to talk about finally is there's 2 ways to look at real estate. Most people buy their house with 20% down. That means they lever up 5x, right? You buy the house for $1 million. You put down $200,000. You're leveraging you're doing a 1 to 5 leverage. So real estate did well over the last 20 years. If you use the leverage principle, it was really good. It still did not beat the stock market. So even if you want to say, well, I just want to look at real estate based on, what I put down or the down payment when I bought the house, it's still at 515% since '02. It still does not outperform the S&P at 650% or the NASDAQ at 1,700%. So looking and seeing the actual numbers, let's bring up NDX. That's the NASDAQ 100 right there. You can see that going back to, we can actually go back a little bit farther. It's not worth it. We can go back like a half more year because the NASDAQ 100 was invented in 1986. But you can see there are no free rides. There were periods in here where it did correct. And if we took this divided by MS World, you can see, well, I guess MS World only goes back to 94, so it doesn't give us more data. So that's not as helpful. But again, you can see that there was a period where international did outperform the NASDAQ. Okay, so let's do this. Let's kind of pull it together. Final weekly update for 2021. So the first is you're going to get hit with a lot of trauma and drama headlines, well written, saying the market's going to crash 30, 50, 70%, and it is going to feel scary. You're going to want to understand how to know the direction of the market and understand that the market's going to digest information, news better than any other entity on the planet. That's one thing I covered in today's video. The other was I wanted to kind of give a highlight of what happens when the Fed prints money or destroys money and what or who were the clear winners during those periods. So hopefully that cleaned things up. And lastly, I know I'm not going in the same order that I presented it to you. What I did was, if you get hit with, the market's super fragile because only 7 stocks represent 93% of all performance, there are simple ways to see if that's actually true. So when you get hit with one of those, just leave a comment on one of my videos and I'll read and go, oh, I can actually show you whether that's true or not, because it's good for me to know what's going on in my subscribers' brains, because I do know you're getting hit with a lot of trauma and drama. Thanks for being in my world this year. I do appreciate you. Please hit the like button. It makes a difference. RC, why do you keep telling me that? A, it's free for you to do, and it does help. It also helps to have engagement. That's why I always ask, leave a comment. Thank you so much. And if you like this video, you're going to like the videos in 2022. And let me know where I'm right, where I'm wrong, where you think I got it right, where you think I got it wrong, and what you want me to cover over the next couple weeks. Thanks so much, and I'll see you on the next video.